This week in crypto has been absolutely packed. The US made big progress on stablecoin regulation, Dubai just moved real estate on-chain, and Trump media shocked markets with a massive $2.5 billion Bitcoin play.
It's too big. Frankly, it's too big, much too big.
But that is not all. Find out what Coinbase and Ripple are fighting over and how it could reshape the stablecoin landscape. Hi, I'm Steve from BeAWhale, and if you care about where crypto's headed, you'll want to hear every bit of this. On May 27th, Trump Media and Technology Group, the company behind Truth Social and controlled by President Donald Trump, announced a $2.5 billion private placement to build a Bitcoin treasury.
Perfect.
The breakdown, $1.5 billion in stock and $1 billion in convertible notes. Backed by nearly 50 institutional investors, the deal is expected to close within days. This move fits squarely with Trump's broader crypto agenda, positioning the US as a leader in digital assets. If successful, this will create one of the largest Bitcoin treasuries held by a public company. The market reaction was immediate. Bitcoin jumped past 110K and DJT, Trump Media's stock, surged 10% in pre-market. It's a clear signal to Wall Street that Bitcoin's institutional era is far from over. That said, the move has sparked controversy, with critics raising concerns over political entanglements and potential conflicts of interest. On the regulation front, the Genius Act finally gained momentum in the US Senate. The bill designed to regulate stablecoins passed a key hurdle with a 62-32 vote, overcoming a filibuster and setting the stage for a final vote. If passed, it would be the first major federal framework for stablecoin oversight. The bill includes licensing rules for issuers and protections for consumers, creating clarity and assets like USD Coin and Tether. Both parties gave ground. Republicans wanted innovation, Democrats demanded guardrails. The compromise worked and the market cheered. Stablecoin trading picked up and investors took this as a signal that US policy is maturing. Analysts believe this could set the tone for broader crypto legislation in the next year. MicroStrategy is making it clear they are not slowing down their Bitcoin strategy anytime soon. Last week, the company picked up another 4,020 Bitcoins worth over $420 million. How did they pay? By selling more stock. That brings their total holdings to 580,250 Bitcoins, around 2.7% of the Bitcoins that will ever exist. Michael Saylor continues to treat Bitcoin as the monetary foundation of the company. Some call it reckless, others see genius. Either way, it will send a message to the market that institutions aren't just interested in holding Bitcoin, they are building around it. Thinking about launching your own crypto project? BeAWhale is your go-to partner for top-tier blockchain development and design. From smart contracts to dApps to full product design, we build beautiful, secure, and scalable solutions. Let's bring your idea to life. Reach out today. In a rare move, India's Supreme Court publicly called out the government for taxing crypto at 30% while offering zero regulatory clarity. The court said if the government can tax it, it can regulate it, and accused officials of ignoring the sector's risks. This came during a crypto fraud hearing, but its impact goes far beyond one case. Traders in India welcomed the move, hoping it would force Parliament to stop dragging its feet. If regulatory framework follows, India could finally join the list of serious crypto jurisdictions. Dubai just made real estate investing as easy as minting an NFT. On May 25th, the Dubai Land Department officially launched Pripco Mint, a platform that lets Emiratis buy fractional property rights using tokens issued on the XRP Ledger. Investments start at just 2,000 UED. What makes this special? These are government-backed real estate tokens tied directly to official land records. That means settlement times shrink from weeks to minutes, and buyers get verifiable ownership on-chain. Dubai has already committed to expanding this model through 2033. If successful, this pilot could revolutionize how property is owned and traded, not just in the Gulf, but globally. Last week, Tether minted another $2 billion worth of USDT on the TRON network, bringing TRON's total supply of USDT to $76 billion, more than Ethereum. Why TRON? it's cheaper, faster, and especially dominant in Asia. These large mints often act as liquidity injections into the market, and once again, Bitcoin hit new highs within hours of the mint. Whether that's causation or correlation, traders are paying attention, and with TRON now the top chain for stablecoin volume, the compensation for infrastructure dominance is heating up. In macro news, President Trump postponed his planned 50% tariff on the EU, which was scheduled for June 1st. The move came after a request from the European Commission, and the new deadline is July 9th. Markets reacted quickly. European stocks rose, the euro strengthened, and risk assets, including crypto, rallied on the pause in tension. It's not a permanent solution, but for now it gave traders room to breathe and shifted sentiment more bullish. And finally, one of the biggest power plays in crypto right now, Coinbase and Ripple are both reportedly in talks to acquire Circle, the company behind USDC. Ripple has already offered between $4 to $5 billion, but Circle declined. Talks with Coinbase are ongoing. Why is this such a big deal? USDC is the number 2 stablecoin and central to DeFi, CeFi, and institutional flows. Whoever ends up controlling Circle could steer the future of stablecoin liquidity. If it's Ripple, expect closer XRP integration. If it's Coinbase, expect even tighter USDC dominance across American exchanges. And if Circle stays independent and IPOs, that changes the game in a different way. Either outcome could reshape stablecoin infrastructure for years to come. It's been a huge week, from billion-dollar Bitcoin buys to regulatory shakeout and stablecoin power struggles. If this is how the second quarter is ending, imagine what the third quarter will bring. Hit that like button, subscribe if you haven't, and I will catch you next week with more market-moving crypto news. Stay sharp.